Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well. If you're new here, every single Friday I break down the latest news and hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. So today's episode, we're going to be going over the Bitcoin halving. We're going to call this one the Bitcoin halving special. And in this episode, I'll share my halving predictions with you, totally uncensored. We'll also talk about a bunch of other Bitcoin related topics, Chainlink, and of course our usual 404 Logic Not Found segment. But like we do on this show every single week, let's kick it off with questions from the community on YouTube and Twitter. So I'll head over to the good old iPad now, and we can get started with those. Now, if you want to get one of your questions answered, leave them in the YouTube comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit that little bell notification button so you can get a heads up whenever I post new content to the good old interwebs. And I need a sip of coffee. Awesome, good to go. So let's dive into these questions. The first question is from Shidabear Shimezi, and I'm sorry if I messed up your name here. Please, what is the best hardware wallet to go to transfer Bitcoin to? Actually, Cash App has a wallet themselves. Well, yes, Cash App is in and of itself a wallet, but you don't want to store your cryptocurrency there. You want to make sure that you're putting your crypto in a place where you own the keys, and that would be within a hardware wallet. Now, the best hardware wallet really is the one that you have. It doesn't need anything super special. I would recommend probably going for something that will serve you for a long time, like a Ledger Nano X, or I even have it here, a Trezor Model T. I really like that wallet as well. It's something that I use pretty much every day. Now, I would say also that you can find some really solid wallets for Bitcoin only, and that would be probably like the Cold Card. That's probably the best Bitcoin only wallet. If you want something that's great for Bitcoin, the Cold Card is amazing. So I'll leave some links down in the description below. If you don't yet have a hardware wallet and you have cryptocurrency, including Bitcoin on an exchange, please just move it off. It's the easiest thing you can do to protect your crypto, and it's worth every single penny in order to do so. So again, please do use a hardware wallet, and that is a great, great question. The next question is from ALMAO, a guy who won the wonderful giveaway we had last week. Stay tuned for that. He said, I almost spat out my coffee. That was when I announced the giveaway. He said, I'm super bullish on Cardano. Once Shelly launches and the D parameter goes to 0, it will be the most decentralized cryptocurrency in the world. Well, that is the goal, I guess. By the way, question for the next one, that would be today, if you were single-handedly in charge of Bitcoin's development, which changes would you make? This question is excellent. So if I were in charge of Bitcoin, the first thing that I would do is I would promote and push for a few different soft forks. The first one would be Schnorr signatures. I think Schnorr signatures are a no-brainer. We've talked about this in other videos. It allows you to create aggregate signatures. It saves space within within transactions and subsequently blocks. I would also push for more native features within the Bitcoin network that will improve scalability. You don't need to push the block size up to these crazy points where you have with BSV and Bitcoin Cash. But there are common sense things that Bitcoin Cash has done, for example, like Schnorr signatures that just need to be in Bitcoin Core, right? So if I were in charge, I would take those common sense things and push them. What I think we won't see is needless hard forks to Bitcoin unless there's a real significant progress stopping bug or issue that we know we have a solution to. I don't think we're going to see another hard fork in Bitcoin. And I wouldn't push for one unless it were really, really necessary. And as it stands now, I don't think there's any protocol change that unilaterally or individually fixes scalability on chain with Bitcoin. And I do think layer 2 has some potential. I don't think Lightning is perfect by any stretch, but that's what I would do. I would push for soft forks to just help as much as we possibly can and do the common sense things, and then go from there. So thank you for that question. Really insightful stuff. Thank you. Sarfaraz Khan asks, Elastos Trinity browser is good. Yes, it is. How is Elastos doing? Yeah, it's been a while since I've talked about Elastos, and I've kept up with it as best I can. There was a period where it was very quiet, and I think they were just heads down building. I think I'm very stoked about what Elastos has done with Elast OS, their, I guess, native application framework for interacting with dApps, where they have native digital identity, a native wallet, dApp browser, if you will, and this is really native to mobile. I think this is a really, really smart move. I think the Trinity browser is also smart, gives increased access to these tools, and I think the way that they've approached giving developers tools and resources to work with, like I'm part of their weekly or bi-weekly dev emails, so I get to keep track of what's going on, and there's lots of great content there to learn. So I still am a fan of Elastos. I'm still watching it very carefully, and I think I'm due for an update video, so stay tuned for that. Thanks very much for the question. Bindas Buddy asks, what's the difference between decentralized finance and open finance? Could you elaborate with examples in the blockchain space? So I think, again, these terms are used very interchangeably. Open finance, though, I think would probably be more characteristic of finance that's more widely available to different, not only different classes of wealth, right? So services that are not just available to the wealthy, or services that are not just available to those in less wealthy positions. But I also think open finance means that it's more borderless, right? You have organizations that can provide financial services to people around the world. And that's what open finance is all about, opening the borders of finance. But I think decentralized finance is taking that a step further and not only making it borderless and making it more available to people, but also to cut out the intermediaries and the middlemen and the providers of these services and make that really algorithm driven. So open finance, you could probably argue that that Khan Academy and the microloans that they give are technically open finance, because they're trying to distribute money here and give access to countries all over the place that don't have access to financial services. You could also say that at the end of the day, DeFi is classified as any finance product where the main intermediary is a smart contract. So I would say that DeFi includes things like flash loans and decentralized loans and virtually collateralized loans, but also things like decentralized exchanges and decentralized markets. Think about Kyber, for example. I think all of these really fall into the DeFi space. Stable coins, too, you can argue, are in the DeFi space, because a lot of products that come to be used by those stable coins or vice versa are DeFi products. So that's a great question. I think there are plenty of examples that you could probably find out there, but those are just the ones off the top of my head. Thanks very much for the question. Nickname asks, such great content. That's really appreciated. Thank you very much. In the snippet from your interview with Kaizen Crypto, you said the following, and I quote, "It keeps me up at night all the time writing contracts." That was smart contracts. What does this mean exactly? Asking out of curiosity for Ethereum and smart contracts, not what you do at night. Hey, thanks, man. Great. So I've done a video about Solidity Code, by the way, and I'll link that down in the description below. It's like a 101 tutorial about how to build your first smart contract, and it's based off of the Ethereum documentation purposefully so that you guys can follow that too. So I'll link that below. In terms of what I was talking about in this interview with Kaizen Crypto, and if you haven't checked out his channel, please do. I was really referring to the fact that building with Solidity, no matter how much skill you have, no matter how often you build contracts, and whether or not you're just a developer or you're a smart contract auditor, if you miss even one small mistake, that's not a syntax error. It's not like a true bug per se, but you've not thought about how the end user might use your product in a way you weren't expecting, or how your code might react to conditions that are not currently within the Ethereum network. Like, for example, when they made changes to gas with the most recent hard fork and they made gas pricing different, there were a bunch of new security flaws and openings and vulnerabilities inside smart contracts that have operated with no issues for potentially years. And so that's what keeps me up at night. When I say that, I mean, I worry. When I build something, I worry about and think about all the potential places where it could be taken advantage of, or a vulnerability could be found, or things could go wrong. And that's what I'm talking about. With Solidity, because it is such a wide open, imperative language, and you have so much room to be creative and create things, you also have a lot of places where things can go wrong. And you've seen that time and time again, especially in DeFi, where products have been really audited. They've been security audited, and there's still things going wrong. So that's what I mean. In an environment where there are other languages that give you more guardrails to put up, and things are very deterministic and very clear, and there's fewer things that can go wrong, you're not going to be spending as much time thinking about all the things that can go wrong. So that was really what I was talking about, but great catch there and great question. Rich H asks, as a crypto lover yet non-tech kind of guy, can you advise me/us on why owning a little device like this, and he's talking about a hardware wallet, would be superior to keeping my crypto on Coinbase? I'm utilizing Coinbase Pro to mitigate prohibitive costs, so on and so forth. Should I not feel safe putting my crypto on Coinbase? Now, a lot of people ask me this type of question, and you know what? In very few instances do I say it's fine to leave your crypto on Coinbase. If you want to leave your crypto on Coinbase for a few days so you can make a trade, that's fine. It's still a risk because if something happens in that period, you're still out of luck. But it's a risk that you might be willing to take. But people use cryptocurrency exchanges as long-term storage, and that is not what they're intended to be. If you think of it this way, unless you own the cryptographic keys, the public and private key pair for your given wallet, for Bitcoin, for example, you don't own that Bitcoin. So Coinbase at any time, regardless of the agreements that you've made using their service, technically owns the keys. And so if they're hacked, something goes wrong, or they lock you out of the service during a bull run and you can't get your crypto out, these are things that happen constantly, and they put you in a position where you have no power over your own assets, what you've spent your hard-earned fiat currency on. And so that's why I say move it to a wallet like a hardware wallet, like a Nano X, a Nano S, a Trezor Model T, a SafePal, a BC Vault. There are so many options. It's worth every penny because it gives you control over what you have. Now, in terms of security, it's also proven to just be better to have a cold wallet, meaning a wallet that is not connected to the internet. Again, this Trezor Model T is not connected to any internet device and has no connectivity on its own unless I connect it via USB-C to my computer. So when it's sitting here apart from my computer, it has no connectivity. And the keys are all stored using a secure element, a special chip on the device that is tamper resistant. This is the reason why I say hardware wallets are superior, and that's because they just are from a perspective of security. So that's really the reason why I say that. It's not because I want to promote hardware wallets and because I want to put affiliate links in the description. It has nothing to do with that. It has everything to do with the fact that I've spent a ton of money myself on securing my crypto and a ton of time, and it's the most important thing in this space is mitigating risks that you might have for your crypto, because people believe in this long term. If you're storing it long term, you want to make sure that it is stored securely. That is just the truth. So thank you, Rich H, for your question. Crypto Verified asks, agree or disagree? Tezos can't scale to the point it can handle serious enterprise adoptions. Applications that require at least 1,000 to 2,000 transactions per second. Okay, so here's the deal. There's no network out there right now that I think can provably handle non-trivial transaction data loads at 1,000 to 2,000 transactions per second with adequate security. A blockchain network and consensus and how we are working today with this stuff is you have this spectrum, right? And you have really secure networks like Bitcoin, and then you have really fast networks. And I would say really fast networks, I guess it depends. I would probably say a really fast network, you could probably say like a BSV, for example. That just, there's not enough use and not enough interest in attacking it, but it is very attackable, right? So you have really secure networks and really fast networks. You can't have both right now. And so ultimately, everyone's trying to blend the best combination of security and speed right now. And so eventually we're going to get to the point where the technology behind this, and it's going to require hardware innovation. It's going to require, first and foremost, innovation in cryptography and consensus mechanisms to get us to the point where you can have a fast network that operates at scale securely. Because you don't want to make sacrifices when it comes to this stuff and how much money is coming through crypto. So that being said, to be honest with you, I think Tezos is in the same position that every other network is in right now that's in that niche, and they're just trying to get to the point where they can scale at least minimally for new enterprise adoption. And the reality is enterprises aren't adopting to the point where they're going to use this as their main system of record or their main system for transactions either. So we have some time, and I wouldn't worry too much about it. Can Tezos scale to 1,000 to 2,000 transactions per second now? No. Neither can any other network, and anyone who claims to do so, there's something going on with the testing where they're setting it up that way, or there's something else going wrong. They've taken and made a trade-off somewhere else. It's usually how it goes. So thank you for the question. Dragon Wind chases Moon. Any advice, please, would be much appreciated on the next alt season. If my altcoin portfolio goes all-time highs, how much percentage would I convert to Bitcoin, 50 or 70% or all of it? That's a personal choice. I really don't know if altcoins go crazy. People want to convert to Bitcoin. Percentage-wise, whatever you're comfortable with, to be quite honest with you. If you don't see much upside in those altcoins and you want to move it all out, it's up to you. Move all of it to Bitcoin if that's the way that you feel, but always go by belief. What do you believe is going to be the most impactful, powerful project, and stick with it. So if you think Bitcoin is all you really want long-term, then go that route. All right, so I think that is the last question on the list today. I know we had a lot of questions to get to today, but we're not going to wait much longer for some Bitcoin content. Oh, and by the way, today's coffee is by Mudhouse Coffee Roasters. They're one of my favorites out there. They're also another local one that I really like. So if you want some coffee, you're looking for some good stuff, and you want some fast shipping, then Mudhouse has got you covered. Now, the first thing that I wanted to say today is that I'm seeing a market uptick in the number of people throwing out all sense of restraint and logic. People are forgetting about risk management and all this excitement before the halving. Now, I'm seeing tweets, news articles on trusted sites, and big names in the space making predictions of grandeur as if this halving is fulfilling some sort of hidden prophecy, like the lights will flicker on and off, the phone will ring and there'll be nobody there, and then Bitcoin will arrive at 1 million USD on the bus that ran it over in 2018. Look, is that possible? Yeah, it totally is. Is it likely or worth the bet that we're going to go to 100K the day after the halving, or the week after the halving, or the month after the halving? No. Oh, and by the way, that was the giveaway opportunity. So tell me the name of the show and episode name that the hidden prophecy that I just came up with was from, and comment it below. I'll pick one random person who got it right to win some BTC. Anyways, as I was saying, please, 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 I'm begging you, remember the lessons people learned in 2017. Nothing is guaranteed. No one knows what they're talking about with price predictions, and they can't safely tell you what to do with your money. You also can't safely make financial decisions based on these predictions because they are just that, predictions. If you look back in time, many of the same people and publications that have made similar bold claims about positive price predictions, they were completely wrong. They were totally wrong. Now, I'm not saying these people are malicious or that they intend to mislead you, nor that they're stupid, but I'm saying to you that you can't use these predictions as a guide to make big, life-altering financial choices like taking out a loan against your house, your car, or other assets to buy Bitcoin in large quantities. That also includes maxing out credit cards to fill up your Bitcoin wallet. It's just ill-advised. Especially during times of global financial uncertainty, that goes without saying. Now, I urge you, in the face of all this hype, all the positive price movement and bullish sentiment towards Bitcoin, we're over 10K, and that's great, to remember the very core of Bitcoin's ethos: trust but verify. Please hold on to that sense of skepticism that we all have in the crypto space, because it's the only thing that puts emotional confirmation bias in check. I mean, we all want Bitcoin to go to 100K. We want it to go to 1 million, and we believe that it's going to happen in the future. I definitely do. And that's why it's so easy for us as a community to believe that it will happen from the halving, because notable people that we trust or publications we trust say so, or print things or publish things regarding the halving and how it's going to happen that way. Now, I'm fighting the same confirmation bias myself. I want so badly to believe that this halving will fire us to all-time highs within a month or two. But I realize the odds are just as likely that we'll see a big price retraction as it is that we see a big jump. Every time people are overextended and lose big money in the space that's small like this is, like we saw in 2017 and 2018, it hurts the growth of the space because people call it a scam, when in reality, it's just a story of poor risk management. Now, the good news here is that my monologue about quelling expectations and being negative is now over. My price predictions can begin with my bullish sentiment, and it can also get some airtime, my positive vibes about the price. Now, I genuinely believe that we will see the halving come to bear on Monday, May 11th at around 3 p.m. Eastern Time, where the overall block reward within the Bitcoin network will drop from 12.5 to 6.25 Bitcoins per block. Now, once this goes into effect, I predict that we'll see a significant but not alarming drop in hash rate as miners that are on the fringe of profitability move on to more profitable mining operations, at least until the dust settles. Now, if you've been watching the big whale wallets, the really rich Bitcoiners, you'll see that there's been quite a lot of accumulation of Bitcoin ahead of the halving. And this leads me to believe that these big holders are preparing for a price jump either right up to the day of the halving or right after it. Now, I'm leaning towards the former. I think if I'm a whale, and I'm definitely not, I'd be betting on making a lot of money in the hype cycle around the halving up to the day that it happens. I'll accumulate a position ahead of the event, and since no one can predict what comes after the halving, this is the better bet to count on in terms of hype ahead of the event. This will make whales money. Now, in response to the halving, I do believe that we'll see a price retraction initially. I think that reality will set in, that we aren't catapulting to $1 million on May 12th, and I think some of the whales will sell off at these peak hype prices. You'll also see droves of speculators realizing that they won't be able to retire immediately, and they'll panic sell too as the price starts to go down just a little. Now, if you held me at gunpoint and you asked me to guess what the number would be when we get to this retraction point, I'd say it's not far-fetched for us to test the 6 to 7K numbers again. But again, this is as good of a guess as a coin toss. If I'm wrong, I'll happily embrace it and I will smile all the way. Now, this sounds like a bad thing, but it really isn't. This is yet another opportunity for smart dollar cost averagers to get more Bitcoin at a discounted rate. It'll also start to form a base support for the medium-term price movement that will be in a positive direction. Think about it. If you now have half the rate of inflation of supply in Bitcoin, you have record levels of Bitcoin holders and hash rate on the network, and you have solid support, even in a financial crisis time period, at levels well above where we thought they would be. Now, I think this halving is going to be different than previous ones, where traditionally we saw about a year-long trek to new all-time highs. I think this is going to be more gradual. I think we might see a 2-year cycle to the parabolic price growth that we've seen in the past. But I think sentiment-wise, this period of financial uncertainty, central bank activity, and like this renewed feeling of unrest towards currency worldwide, Bitcoin's never been in a better position as a hedge against all of the stuff that's going on right now. I think that people simply just don't have the free capital to invest heavily in Bitcoin or even heavy metals for that matter, because people are struggling. Now, what this does mean is that the economy globally, and as it recovers, which it will, millions upon millions of people will understand the core reasons why Bitcoin exists and why they need to be invested in it when the next inevitable economic crisis occurs. This right here is the key. This right here is a critical component to new all-time highs. We need all-time high numbers of people to be interested in and invested in Bitcoin, and I believe that will happen, but not in a matter of days or weeks, but in rather months or years. The halving simply reinforces the exact phenomenon that people are beginning to understand, and that is true scarcity. True scarcity cannot be overstated as a benefit and a value prop for Bitcoin. This simple fact even drove a prolific hedge fund manager, Paul Tudor Jones, to liken Bitcoin's status to gold in the 1970s as a strong, profitable play during economic uncertainty. Jones said, and I quote, "The best profit maximizing strategy is to own the fastest horse," with which he followed, "If I'm forced to forecast, my bet is it will be Bitcoin." This just shows that at every level of wealth and knowledge, people are realizing the value of Bitcoin and why it's important. This is as bullish a trend as any that I can think of for the long-term investor. And again, if you pair this with the news that Grayscale Capital and Square's Cash App, both who serve Bitcoin investors, reportedly consumed for their customers nearly half of the total mined Bitcoin in the first quarter of 2020. I'm even more bullish because of that. Now, this again shows the ravenous appetite that investors have for Bitcoin these days, and Bitcoin is still a long-term play. That's a deep-rooted opinion of mine. It's not a get-rich-quick scheme. It's not a free lunch. And now I never do this. I never do this. But I'm going to give you my gut feeling price predictions numbers for 2020 end of year and 2021 end of year. And I do this with the condition that you please not invest based on my opinions, because I can tell you with 100% certainty that these are guesses and intuition. I have no idea what will happen. I genuinely care about you and the entire community, and I don't want to be the reason why you lose money. So if I don't promote integrity, this channel is basically meaningless. So I'm telling you now, please take what I have to say with a grain of salt. So now that we have that out of the way, I think that at the end of 2020, we'll be hovering right at the previous 2017 all-time highs of 20K, with strong support this time. We're gonna have less volatility at these levels than we've seen before. I also think we stay in that area with some big drops and big bounces and some volatility along the way until we get to the end of 2021, where we start to see significant new all-time highs at around 35K USD. Again, this is based off of zero technical analysis, zero trading knowledge, and just intuition. So take it with a large grain of salt. First, a sip of coffee before we move on, but there's more Bitcoin stuff ahead. So I want to pivot now to bust another crypto-related myth. And in light of this Bitcoin halving special, let's just keep it right in the Bitcoin realm. By the way, I'm still collecting name ideas for what to call this segment where I bust common crypto and tech-related myths, so if you have an idea, please leave them in the comments below. So the myth I want to hit today is that the Bitcoin halving will result in a price doubling as miners decide that they just won't sell Bitcoin for anything less than the profit margin that they had before the halving. This is simply not true, and it doesn't play out this way. The miners don't have this type of power, first of all. And unless every single miner decided to collaborate on fixing prices like this, the global asking price for Bitcoin won't budge in their direction. Furthermore, there's an increasing amount of Bitcoin in the hands of retail investors, and the dynamic between miners and other holders is far less skewed towards miners these days than it has been in the past. I believe that miners can be profitable without the price doubling simply by reducing costs, by the reduction naturally of the hash rate and difficulty, and natural price growth for Bitcoin, not a doubling. There's even been stories shared about miners in New York, far from the cheapest place for electricity, that claim to be profitable post-halving already at their current operating costs. So if they can do it, so can others. And I don't buy this idea that miners are just all going to capitulate at the same time because they're not profitable. They should have been preparing for this for a long time. You actually want miners who aren't efficient, not profitable, and not invested in the network to leave, because the halving will likely then cement the truly committed and efficient miners as a sort of soft reset for years to come. And that's how the network sort of freshens itself in terms of mining, and that's a good thing. So now that we have the myth out of the way, it's time for our favorite segment, and that's 404 Logic Not Found. And for those who are as of yet uninitiated in this little firecracker of a segment, in this segment I highlight notable tech-related fails or otherwise stupid moves in the world of technology that need to get some attention. Now this segment is fun, and if you like fun, you should probably show that like button some love. I really appreciate it, and sometimes I really just lean into the psychosis required to speak to the camera like it's another person. Anyway, before we get started, caffeine refill. The first place that I'd like to start is with Uber, who reported a net loss of almost $3 billion in the first quarter of 2020 and are being crushed by the situation right now with quarantines. They've now decided it would be a good idea to move into the world of surveillance. Reports have surfaced that Uber is now considering using selfie camera permissions on the drivers' phones to verify that drivers are wearing masks. Are you serious? That's your grand solution to make people safe and feel safe using your service? I can assure you that if selfie cameras are collecting images from inside the car and running it through image analysis on Uber's servers, I will never put these butt cheeks in an Uber ever again. I can also say this truly, many drivers will also feel that way. They don't want to be spied on and looked at and have their images taken to verify they're wearing masks. This is just a really bad move. Why don't you just put the onus on the rider? If the rider gets a ride and doesn't feel comfortable with the driver that isn't wearing a mask, they can just cancel their ride fee-free because of a new policy you've put in place to make people feel safe, right? Duh, no image recognition or selfie cameras required. 404 Logic Not Found. Now this next one will be quick, but one of my favorite movie theater chains, Alamo Drafthouse, just launched their own on-demand curated movie service where customers can rent or buy movies picked by Alamo's staff themselves. And I love them, they have a great personality. This is a rapid pivot in times of uncertainty. well done. This is great. But let's shift to the other movie theaters, the big guys, that have basically just been complaining and fighting with production companies who are now shifting themselves to digital releases instead of, trying to fix the problems that they're facing. So, hey, AMC, Regal, and all the other big name theaters, get real. Your time is now limited if you don't get creative and bring more value to your customers in the way that they want to be consuming content. The decades of prioritizing $10 sodas are now probably over. So if you create digital experiences that mean something to people, you'll probably survive. But clinging to the past and then complaining about what you can't control will only ensure your demise. Hello, Blockbuster. 404, logic not found. We got a little aggressive on that one, so I'm sorry, but you know what? It's late in the day. I'm drinking coffee. It was a long week, and those were two pretty goofy moves. So had to do what we had to do. Now, as promised, I have some Chainlink news to address here, and that's really simple. A notable Chainlink node operator, VulcanLink, who provided and provides still to this day decentralized price feeds for dApps, has announced that they have moved their hosted services from their traditional .com domain to a .crypto domain from Unstoppable Domains. Of course, these domains are now registered and reconciled, all on the Ethereum blockchain. This means that their web content is no longer threatened by takedowns that are often a result of centralized domain management. It's pretty darn cool to see these services, these unique services like Chainlink oracles, decentralized domains, IPFS websites, that all used to be really fragmented, start to merge together to get used in real time as like this concrete product. So I'm really stoked for the future as all these different services that have been building for so long start to come together and really create value. So as always, folks, I will leave some other awesome tech and crypto related content here on the screen if you have time to hang out some more. But either way, no pressure, and I wish you and your family a wonderful and safe weekend. Until next time, cheers.